Well, good morning, everybody. How are you? Happy Monday to you. Welcome to May 2nd, 2022. Welcome to the open house here. Hit and run candlesticks, right way options, and live trading alerts all in one room for 2 days. One of the things that we really would ask of everybody is please ask questions if you have questions. If I don't know the answer, I'll certainly tell you I don't know the answer, and we'll find somebody that does know the answer. Good morning, Julie, Scott, Ron, Stephen, Fred, Doc, John, Anthony, Dick. I see a few new names in here, so welcome everybody. This is an open house. Public is invited. So if you have friends and neighbors, children, it is a family show for the most part. Glad to have everybody here. Yeah. Let's see. I have a pain. Please fix it. You want me to fix your pain? You just need to go to the liquor store. That'll solve it. Okay. So let's get going here. What I do in the morning is a little pre-market. We'll look at some charts. We'll look at the market. Then I'm going to go away for a few minutes. And then we'll come back right when the market opens. I'll be working for about an hour after the market opens. Then I think Doug from White Way Options will be coming on. And then at some point today, Ed from Live Trading Alerts will be here as well. And then we'll kind of bounce back and forth. So please, again, ask questions about charts, whatever you need to, okay? All right, so let's take a look at the market here. Number one, and absolutely the first thing here is there's not a doggone thing bullish in this market. So if you're not comfortable with shorting or buying puts, this is a good time to ask. Well, not this time right now. I'm on a real schedule here right now. But today and tomorrow is really a good time to ask and talk about that. We have several scans that we like, several chart setups that we like that bring out the best in some short or putting trades. So if you're determined to be a bull, keep an eye on some of the inverse ETFs. They might pay out pretty well. But right now, trying to catch a bottom down here, I think, is a massive mistake. All right, let's get going. So here's what I see in the SPY right now. Price down here, we're below the T-line, we're below the trendicator, we're below the 50-period moving average, we're below the 200-period moving average. It just doesn't get any uglier than that. It just does not. There's not much you can do in this market to make it any worse than it is. So rather than fight the market, trade with the market. And that's mostly what we'll be doing today, tomorrow. If we take a look at the diamonds, there's nothing here that's positive at all that I see. I could repeat this, but it's the same thing. Price is under everything. We've got the 500-period moving average down here at about 320 that I think we're headed to. Now, that doesn't mean that at some point, could be today, you don't know. We could have some kind of relief rally. Any kind of relief rally, I will look at that as a PUO, pull-up opportunity. So it's a bearish opportunity. A relief rally, we can certainly trade long in that. You might make some money. We'll certainly look at that. I love those sort of things. And then we'll look at going short again until the trend changes. Until the trend changes. The Qs, nothing good about the Qs. We're already under the 500-period moving average. There's just nothing can go more wrong with the market, okay? Can it go lower? That's not more wrong. Because if you're on the right side of the market right now, if you accept that the market is sour, ugly, stinky, if you accept there's no bulls around, then going lower is not wrong. It's right. Does that make sense? If you can accept what's going on, and if you're trading short or puts, going lower does not make the market any uglier. It puts it in your court is what it does. And there should be no reason why money is not being made going lower, unless you're constantly looking for a bullish trade like, oh my God, a Morningstar, right? Means absolutely nothing without follow through. Then you're at home. You're comfortable right here. Let's take a look at T2122. Very oversold, but this is not a buy signal. Okay. Charts like this, these are not buy signals. These are indicators that say, yeah, we're oversold, so what? Yeah, we're overbought, so what? The trading should be done from the chart, not from a sidekick indicator, and that's all that is. We look at it, we pay attention to it. It's oversold, it's overbought, it's kind of in the middle doing nothing, but it's nothing more than a sidekick indicator. Follow price, follow trend. Follow price, follow trend. Lauren, T2122. Whoops, wrong one. Let's come over here. T2122 is an indicator on TC2000, and it simply points out the 4-week new high-low ratio is what it is, okay? It's a TC2000 thing. You can Google it and maybe read more about it, but bottom line, it's just a 4-week new high-low ratio is what it is, okay? All right, let's take a look at some charts. Now, what I did today is I pulled up some charts. I even pulled up a couple that I thought, it doesn't matter what they're doing. I thought they have some importance in the market. You can get a copy of this, watch this, by going to the home page and clicking on the blog, the Hit Run Candlestick blog. There's a morning write-up every morning, and there's a copy of all trade ideas. You can also, while you're there, click on the Right Way Options blog, and there's a nice write-up. Doug does a morning video every morning. This is a video will be posted in a little bit here. Okay, so as I'm looking at GM, I was short GM, and I did get out of GM Friday. I think I did. Yeah, Friday, because I wanted to lighten up on any kind of risk. I am looking to get right back into GM here. This is looking short and looking like more downside right in here. If it started moving up over about 39.50, make that about 39.30 up there, maybe even the T line. I think that's what I'm going to do. Over the T line here, then I will be stopped out. I am looking to get back short on that there. Apple, there's probably, I'm probably one of those people that want to be long Apple, like a lot of people might want to be long Apple. The time to be long Apple is when it's time to be long Apple. So the $64,000 question is, when is it time to be long Apple? Well, number one, I'm not a bottom picker. I think it's just not cool. And every time I pick my bottom, it seems somebody takes a picture of it. So I do my best not to pick my bottom, and it won't end up on family Facebook pictures. So just don't pick your bottom. Wait for the chart to turn around. Wait for something to change. A candle like this, that is not a change. That's just a itch in a day is all that is. What we want is a low, a high, a higher low, and a higher high. So right now it would have to be up here. So what does that mean? Yep. Give up all the profits you could possibly make right here, because honestly, the risk you're risking is much too great for the profits you're going to make. So make sure it's in a true bullish attitude here. Right now, Apple still looks like it's going lower based on the price action here. Hey, David, I'm not trying to avoid anything. I'm on a real time limit here. I only have so much time. So if you could ask those questions afterwards, then by all means, okay? This right here is, like I say, I only have minutes in here to get through this before I have to shut down. All right, I appreciate it. Thank you. Microsoft is another one that a lot of traders like to be long in. A lot of traders like to be short. Don't get me wrong, it's not all about the long side. There is nothing about Microsoft that would say to be long. In fact, to me, this looks short, and there's the 500 period moving average right down there. We're getting awfully close for that magnet just to suck it right in there. So that's what I'm looking for, unless something changes. So right now, let's see, here we go. Right now, Microsoft looks down. I don't want to buy long in here. I would consider buying long up. Right now, based on what we see here, I would consider buying long up in this area, but it's going to have to climb all the way up and prove it can get up into this area here. As long as we stay below that red line, as long as we stay below the trend indicator here, I just don't see a bullish buyable chart. Even today, if we did something like that, I could not see that as a buyable bullish chart. Coke. Now, Coke is one, yeah, I'm still holding Coke long. If it does break down here, I will close out of it. So right now, what I've got in Coke here is we're trending up. We've pulled back. We do have some ugly candles in here. Maybe in hindsight, Friday would have been a good time to get out of it, but I didn't. Still holding it. Let's see if this holds up. If it does, great. If it doesn't, then I will be closing this out. If it does hold up and we start to get bullish here, there's a chance that I will be adding to this. And yes, this is a short trade if we start breaking down 64.60, and that might put us down into the 50 period moving average here. KBH is a short trade. KBH is trending to the downside. You can clearly see that. And now we're putting in this little wedge right in here. Anything to the downside would be a short. Of course, if we came up through this top, that might be a long play right in here. But right now, what looks more real to me is to the downside. Yeah, that's what looks more real to me. We're below the 50 period moving average, and the overall trend is still down. 3M, this is a chart that I am currently short on. 3M has nice downtrend here. We did have a nice little move up, and it just started losing all of its gusto right in here. We came to the downside. Could have been a good opportunity to the long side. A pair of dojis here. Nice bullish candle, but we had no follow through. Failed at the 50 period moving average and the trend indicator. Put in a more of a Hiromi. I can't tell if that's a bullish bearish engulf or not. My balls are still not awake yet. And then it looks like this morning we're seeing weakness pre-market here. So anything below the T line, maybe anything below the red dots here, I'll stay with that short. It looks like it has more side to go down, more downside. Here's a weekly chart. We've got a nice bearish H pattern in here. We start to break through that H pattern, and then we can see the target down into this area. Maybe that 125, 130 area is what we might look for. If somebody's looking for something long, SQQQ might be worthwhile if the market does continue to push to the downside. SQQ might be one to look at. We are a little toppy here. We're at some tops, so you just want to watch that. Want to be careful with that. This would be a good time to remind everybody. You don't have to trade every day. You don't have to trade on a Monday. You don't have to trade just because you're in this room. You know, sometimes you have to wait for the best trade. So as we're approaching this top right here, resistance, and right now I'm going to let everybody know Resistance to me is just a speed bump. Sometimes it slows your tail down more than you want, but it's just a speed bump. Approach it with caution. Give it respect. Give it respect. So I see the speed bump slow down. We get over that speed bump. Now this becomes a trade up here. So that might be the thing to do rather than get all kinds of itchy and fear of missing out and, oh my God, I have to make $1. No, you don't have to make $1. You get in too early, and then what happens is that speed bump sets you back down for a little while, and then you have to approach that speed bump again a little bit differently. So always respect that resistance line. You don't have to be in early. Never, never. AA, this is one that I got in short Friday. Looks like I'm going to do all right here. Closed Friday at 13.7% green, so it'll work out, it looks like, this morning. If we get through the dotted deuce, which we'll talk about that today, what is the dotted deuce? That's right there. We get through that, then the 200 period moving average is a very good target area down there. I have time for a couple more. UNG, if somebody's looking for a long chart, UNG is still a long chart. We've got a nice bullish trend right here. We could be setting up, I would say, over 25.75 over this candle right here. This could be a long trade in there. Watch that top up here, 28. 10-ish area. Keep an eye on that. But UNJ might be one of those that you might put on your long chart. One more short, then we're going to call it a day here. BTU looks short. This is a blue ice failure. Between today and tomorrow, unless the market does some ridiculous bullish reversal, we're going to be talking a lot about blue ice failures, Oreo cookie pattern setups, pull-up opportunities. Those are the kind of things that I'll be talking about, looking for setups in the next couple of days. Like I say, unless the market does some ridiculous, big bullish turnaround here. So anyway, BTU is a blue ice failure. Right now, I'm looking for it to fall down toward the 200 period moving average. For those that don't know, I use moving averages an awful lot. It doesn't mean that I'm going to wait for it to get down there to take profits. I may take profits halfway down or be watching price action to see what it does. All right, I'm going to call it quits. I'm going to step out of here. We'll be back. I'll be back in about 20 minutes, right about the market open. Everybody, go get yourself a cup of coffee, a Coke, some iced tea, scotch, whatever the heck you like to drink, and we'll see you all back here, okay? Thank you very, very much for being here. Back in 20.